Students, here we have balance sheet of RST Limited as on March 31, 2008 and March 31, 2009. So we have 2 years balance sheet wherein we have the information on liabilities and assets. Look at the equity share capital. In 2008 it is 10 lakh, in 2009 it is 12 lakh. So equity capital has increased by 2 lakh. Look at the general reserve. In 2008 it was 3,50,000, whereas in 2009 it has come down to 2 lakh. So there is a reduction by 1,50,000. We have to see why there is a reduction. Similarly, the 9% preference share capital, in 8 it was 3 lakh, whereas in 9 it is 5 lakh. So it appears there is some fresh issue. And share premium, 2008 it was 25,000, whereas in 2009 it is 4,000. So there is a reduction by 21,000. We have to see what is the reason. P&L account, 2008 2 lakh, 2009 3 lakh. So it has increased by 1 lakh. We should see what is the exact increase from operations. I mean, this increase between 2 to 3 lakh of 1 lakh is only because of the retained profits, but we are talking about fund flow statement. In fund flow statement, we should know what is the funds that has been generated from operations. So we should keep the difference of 1 lakh as base and we should do the additions and subtractions. We'll take it up at the appropriate point. Then 8% debentures, from 3 lakh it has come down to 1 lakh. It looks like debentures have been repaid, but we have to see the information in the question. Then creditors, there is a movement. Bills payable, there is a movement. We'll consider both in working capital, current liability. The next item, provision for tax. Previous year it was 70,000, current year it is 1 lakh. We cannot conclude that there is an increase by 30,000 because it is possible that 70,000 could have been paid and this 1 lakh may be a fresh provision, or part of the 70,000 has been paid and only a additional or a marginal addition is made in the provision. So it is highly possible, so we have to look into the information. Then proposed dividend, again it's not a mere 1,10,000 increase when compared with 150 and 260, because what is proposed in the previous year should have been paid in the current year. Then this may be a fresh provision also. Look at the asset side. You have land and building 6 lakh and 7 lakh. So on look, land and building value has increased. It indicates there is a fresh purchase. Plant and machinery, from 9 lakh it has moved to 11 lakh. On look, there is an increase and it indicates there is a fresh purchase, but we have to check for both the items whether there are any sales. Then investment in long-term asset, from 2,50,000 it is still maintained at 2,50,000. We have to see the supplementary information for any adjustment required here. Then stock, debtors, cash and bank, prepaid expenses, all the 4 items would come under current asset, and bills payable and creditors would come under current liability. So we will factor these items in movement of current liabilities. The next one, advance tax payment, 80,000 and 1,05,000. So last year the advance tax that has been paid is 80,000. Current year it is 1,05,000. We have to read these 2 items in conjunction with provision for tax. We'll take it up at appropriate stage. Preliminary expenses, last year 40,000, current year 35,000, meaning some 5,000 has been written off. So if this 5,000 is a non-cash item, the profit would have been arrived after providing for this 5,000. So we have to do some addition back in funds from operation. Let's see. There are some additional information as well. Number 1, depreciation charged on building and plant and machinery during 2008-9 were 50,000 and 1,20,000 respectively. So on building it is 50,000 and on plant and machinery it is 1,20,000. During the year, an old machine costing 1,50,000 was sold for 32,000. Its written down value was 40,000 as on date of sale. So here you get some additional information, that is, the machine costing 1,50,000 was sold for 32,000. Its written down value is 40,000. So 40,000 worth machinery is sold for 32,000. So there is a loss on sale of asset of 8,000. That should be kept in mind, because when the profit was arrived, it would have been arrived after providing for this loss of 8,000. That should be added back. Next item, During the year, the income tax for the year 2007-8 was assessed at 70,000. A check of 4,000 was received along with the assessment order towards refund of income tax paid in excess by way of advance tax in earlier years. I read this again. During the year, income tax for the year 2007-8, I mean we are talking about year 8-9. So in the income tax for the year 7-8 was assessed at 70,000. Okay, so the tax was assessed at 76,000. I'm sorry, 76,000. Now let's go back to question once again. What is the provision that they have made for tax? Provision they have made for tax is 70,000, but income tax department came out and said it is 76,000. So there is a short provision by 6,000. But what is the tax they have paid for this 70,000? For the 70,000 they have paid a tax of 80,000. So what they have provided is 70,000. What was assessed is 76,000. What is paid is 80,000. So payment part 4,000 is excess. So that excess only has come back. That excess of 4,000 was received. A check of 4,000 was received, whereas a provision has to be made for the gap between 76,000 and 70,000. This we have to keep in mind. Proposed dividend for 2007-8 was paid during the year 2008-9. 9% preference shares of 3 lakh which were due for redemption were redeemed during the year 2008-9 at a premium of 5% out of the proceeds of fresh issue of 9% preference share. Now let's go back to question again. Look at here. The preference shares, they had 3 lakh. Okay. This was due for redemption in this year and this was redeemed at premium. But how they have redeemed is they have made a fresh issue. They have made a fresh issue equivalent to this. Then apart from that, they have also made some additional issue, it seems. So we have to check. So we'll take it up at the appropriate stage. Next one, bonus shares were issued to the existing equity shareholders at the rate of 1 share for every 5 shares held as on 31/3/2008 out of general reserves. I mean, they are going to give 1 share for every 5 shares. So let's see here. The capital as on this date is 10 lakh. So assuming this 10 lakh is for 5 shares, then 1 share is equivalent to 2 lakh. So 2 lakh worth of equity has been issued. So it is only for this reason the equity has increased. From 10 lakh, this has moved to 12 lakh. So there is an increase by 2 lakh. But how this increase had taken place? Is there any fresh issue? Or I'm sorry, is there any fresh inflow of money? Answer is no, because it is bonus share and that was done by using general reserve. General reserve, they had 3,50,000, of which 2 lakh is used for equity. So out of 3,50,000, 2 lakh has gone for equity. The balance should have been 1,50,000, but the balance is 2 lakh. It means some 50,000 fresh transfer of profit has taken place for general reserve. So we have covered this item. Item number 7, debentures were redeemed at the beginning of the year at a premium. Debentures were redeemed at the beginning of the year at a premium of 3%. Let's see here. Debentures, they had 3 lakh and that was redeemed. Entire debenture was redeemed at a premium. So there is a fresh issue to the extent of 1 lakh. Interim dividend paid during the year 2008-9 was 50,000. So this we have to factor while considering the profits. So number 1, we have to prepare a schedule of changes in working capital. Number 2, we have to prepare the fund flow statement. Preparing the schedule of changes in working capital is very simple. We have to list out the current assets and current liabilities, find out the difference between current asset and current liability, which is the working capital. Find the movement between these working capital. That will give you the changes in working capital. Let's get started. We'll have a table. We'll list out 31/3/2008 and 9 the current assets and current liabilities. The current assets were stock. The values are here from question, picked from question. So is there any increase or decrease? If you look at the stock, from 3,60,000 it has come down to 3,50,000. So there is a decrease. Next item, debtors, 3 lakh to 3,90,000. So the debtors value has increased by 90,000. Then cash and bank balance from 1 lakh it has moved to 95,000, so there is a decrease by 5,000. Then prepaid expense from 15,000 it has moved to 20,000, so there is an increase by 5,000. So you have the total 775 and 855. So there is an overall increase. Look at the current liabilities. Number one, creditors from 2 lakh 5,000 this has moved to 3 lakh. So there is an inflow. But this inflow we would treat in decrease column. Reason is you get money. When current asset decreases, you have fund flowing in. Similarly, when the current liability increases, you have fund flowing in. So both are given equal treatment. Next item, bills payable 45,000 has moved to 80,000. Again, there is an inflow. So 36,000, but we are bringing it under a decrease column. So we are taking the total. Please note we have not considered the provision for tax and dividend payable because they are considered as part of long-term source and use. So here you have the net working capital 775 minus 250 which is 525 and 855 minus 381 which is 474. So previous year the net working capital requirement was 525 whereas in the current year it is only 474. So there is decrease in working capital requirement and it is 51,000. So that will have it here. So if you take this total and that should be equal to this one. So we'll take the total now 525 here, 525 and here the total is going to be 146 and 146. So we have completed question A. So in question A what we understand is the net working capital requirement of the company has come down in 2009 when compared to 2008. In 2008 they were requiring working capital support for 5,25,000 whereas in 2009 their requirement is only 474. So the requirement has come down by 51,000. So this 51,000 is going to act as source of fund for the company because the funds were not required for working capital purposes. Next we have to move on to question B where we should find fund flow statement. Prepare fund flow statement, but for that we need several workings. What we have discussed so far, we should have it as workings now. Let's move on. Question B. First of all, let's have a working note for plant and machinery because we have some information on plant and machinery. We know what is the opening balance and closing balance. Plant and machinery, we know the opening balance is 9 lakh, but of course we have some other information on plant and machinery. What are they? We know what is the depreciation provided on plant and machinery. It's available in the question, which is 1,20,000. So 9 lakh was the opening balance. If I provide depreciation of 1,20,000, my balance should have been ideally say 7,80,000. But I also understand from the question there is a sale of asset. How much? It is sold for 32,000. But we also had the information that the assets written down value, the plant and machinery which is sold, its written down value is 40,000. The 40,000 worth of asset is sold for 32,000. So there is a loss on sale of asset to the extent of 8,000. So you had 9 lakh worth asset of which 120 had gone by depreciation and remaining 40,000 worth of asset is also going out. So ideally the balance should be 9 lakh minus 1,20,000 which is 7,80,000 minus 40,000. Ideally the balance should have been 7,40,000, but you have the balance as 11 lakh. The balance should have been 7,40,000 whereas you have it as 11 lakh. It means you have some purchase to the extent of 3,60,000. Let's check that. We'll take the total on the higher side, which is 12,60,000. So we'll have it here also 12,60,000. Compare 12,60,000 with 9 lakh. You have a difference of 3,60,000 and that represents fresh purchase of plant and machinery for 3,60,000. Fine. So working note 1 is over. Now this is going to tell us there is a fund outflow to the extent of 3,60,000 which we have to keep in mind while preparing the fund flow statement. Similarly, there is also inflow of fund to the extent of 32,000 which we should keep in mind in inflows in fund flow statement, and this P&L should be this loss on sale of asset factored in P&L should be taken care while preparing funds from operation, and this depreciation should also be taken care while preparing funds from operation. Working note 2, the provision for taxation. Provision for taxation is very important in this problem because that plays a major role. We know the opening balance of provision for taxation is 70,000. Then we had some other information saying that the tax for the year was assessed at 76,000. Okay. The company has already paid advance tax of 80,000, whereas tax has been assessed at 76,000. So for this 70,000, there had been a tax payment of 76,000, is it not? Because last year when this provision was made for 70,000, the company had advance tax of 80,000, but they both were not interlinked because the assessment was not over. Now you have a provision of 70,000, but for this provision, corresponding provision, the matching payment is 76,000. It means provision is now short by 6,000. Okay, so provision is now short by 6,000. That we should factor. Then we also should know what is the provision for taxation that has been made for the current year. So look at here. The question says the provision for tax balance is 1 lakh. So now you get a point that you had an opening balance of 70, of which you have closed it by advance tax payment of 76,000. It means on the credit side you should provide some 6,000. Apart from that, you should also make a fresh provision for current year, which should be equivalent to 1 lakh. So we'll do that here. You have total 1,76,000, whereas here it is only 70,000. So this gap of 1,06,000 would be used for first booking provision for the year, which is 1 lakh, and additional provision for 2007-8, which was missed out because 76,000 was the tax payment. Provision made is only 70,000, so 6,000 is made. So in this way we have accounted for provision for taxation. What we should keep in mind is this tax payment is cash outflow, so this should come in use of funds, whereas this is the P&L provision that has been provided in the current year, and this 6,000 is also provided in the current year, so both should be considered in funds from operation. Now we'll move on to working note 3, where we should consider advance tax payment. Look at here. The opening balance of advance tax payment was 80,000, and of this the actual tax obligation is only 76,000, so there was a refund of 4,000, so we will factor them now. What is actually required is only 76,000, so there was a refund of 4,000. So 80,000 was used in this way. 80,000, 76 has gone for adjusting against provision for tax, and there was a refund of 4,000. But the balance should have been 0, but in the end you also note advance tax of 1,05,000. So the opening balance was 80. This 80 was consumed in this way: 76 towards provision and 4 towards a refund, but still you have a closing balance of 1,05,000. So what we'll do is we'll take the total on the higher side, which is 1,85,000. So this indicates that in the current year again advance tax of 1,05,000 has been paid. So to bank, the advance tax payment is 1,05,000. So this is more important. So when you consider a tax outflow, I repeat, when you consider tax outflow, it is only this 1,05,000 and not this 76,000, because this 76,000 was already paid in the last year as 80,000. Look at here, already last year paid is 80,000, of which only 76 is attributable to the previous year. 4,000 have been returned back. So we should consider this as use of funds, whereas this portion should be considered as source of funds. Next we'll move on to the next working. We'll have a working note for debentures. Why we need a working note for debentures? Because there was some redemption, we should factor them. So what was the opening balance? Opening balance was 3 lakh. There was a redemption of debentures at 3% premium. So this 3 lakh debenture, of which 2 lakh has been redeemed, because the closing balance says it was 1 lakh. So this 2 lakh is redeemed at premium. So 2 lakh into 103%, this includes 3% premium. So we'll have 2 lakh 6,000. So 3 lakh minus 2 lakh 6,000, it means you had an additional obligation of 6,000 on account of premium. We'll account that also. But before that, we know what is the closing balance. Yeah, closing balance is 1 lakh. So we'll take the total on the higher side, which is 3 lakh 6,000. So 3 lakh 6,000, if you take here, the total here also will be 3 lakh 6,000 minus 3 lakh. That 6,000 is nothing but premium on redemption of debentures. So we'll capture them here, 6,000. So the total is 3 lakh 6,000 both sides. In the same way, we'll do 9% preference share capital also. The preference share capital will have a credit balance. The opening balance was 3 lakh. Then there was a redemption, but the redemption was made with a fresh issue. That's the information we have. The redemption is at 5%. So 3 lakh into 105%, it is 3 lakh 15,000. This redemption is made at a premium, so this 15,000 is extra, so we have to account liability for that. Premium on redemption of preference shares, which is 15,000. So 315 gone, but still there is a closing balance of 5 lakh. You had 3 lakh, okay, this 3 lakh had gone out with premium, so that was also accounted. The closing balance is supposed to be 0, whereas you have a closing balance of 5 lakh, meaning there is a fresh issue. So we'll take the total on the higher side, which is 8 lakh 15,000. So 8 lakh 15,000 minus 3 lakh 15,000 will tell you there is a fresh issue, which is 5 lakh. So this should be considered under source. This should be considered under use. Now, you have this premium on redemption of preference shares 15,000, premium on redemption of debentures 6,000. Ideally, these premiums would be charged to profit and loss account. But if some cushion is available in the form of securities premium, it may be adjusted in securities premium also. And in this problem, if you read the securities premium, that balance has come down by exactly 21,000. So we are making an assumption that this premium is not charged to P&L, rather they are charged to securities premium. So we'll have a working note 6 for securities premium. It had an opening balance of 25,000. This is used for two purposes. One, for accommodating the premium on redemption of debentures, which is 6,000. The other one for preference shares, which is 15,000. So now you have a closing balance of 4,000. So this account is closed. So what is more important is this 21,000 is not routed to P&L. So your funds from operation is not affected because of this 21,000. This should be kept in mind. Next, we'll have working note 7 for general reserve, because there is some movement in general reserve. One because of bonus issue and the other one because of transfer something from profit. So general reserve had opening balance of 3,50,000. Then 2 lakh is used for bonus purposes. So the closing balance should have been 1,50,000, whereas the closing balance is 2 lakh. Meaning you take the total on the higher side 4 lakh. There is a difference of 50,000. That is something which is transferred from profit and loss account. Next, we'll have a working note 8 for land and building. The land and building opening balance was 6 lakh. Depreciation provided is 50,000. Closing balance should have been 5,50,000, whereas closing balance is 7 lakh. So we'll take the total on the higher side, 7,50,000. So there is a difference of 1,50,000 which indicates purchases. So this 1,50,000 will find a place in fund flow as use, and this 50,000 will find a place in funds from operation for adjustment. Next, we'll have working note 8. This is estimation of funds from operations. So now what we'll do is we'll start with P&L balance as on 31/3/2009. Then we'll do all the adjustment. What is the balance? 3 lakh. So we have to do certain adjustments. Number one, we'll adjust depreciation on land and building, plant and machinery. Land and building, it is 50,000. The plant and machinery is 1,20,000. Next, we should adjust this loss on sale of plant and machinery because your P&L balance would have been arrived after deducting this 18,000. I'm sorry, 8,000. So we'll add back that. Next item is preliminary expenses. Here we understand preliminary expenses have come down from 40 to 35,000. So the P&L balance would have been adjusted by this 5,000. So we'll add. Next item is transfer to general reserve. Here we have done that in working note 7, wherein there is a movement, but what is transferred from P&L is only 50,000. So we are showing that here. Next item is proposed dividend. The dividend that is shown in the balance sheet as proposed dividend for this year is what would have been charged in P&L. So that is 2,60,000. Then provision for tax. Here we have to be careful. We have to make use of a working note 2. In working note 2, we had made provision for tax for 2 years. For previous year, which was missed out, that is 6,000, and current year, which is 1 lakh. So it is 1,06,000. And there is an interim dividend payment also, and that was around 50,000. So there is a proposed dividend which happened in year end, and there is also an interim dividend. Let us take total of all this, which works out to 6,49,000. So we are going by reverse way, 3 lakh, and we are adding all this, and that makes to 9,49,000. But of this 9,49,000, some portion is attributable to the previous year. So we'll deduct P&L balance as on 31/3/2008, which is 2 lakh. So the effective funds from operation is 7,49,000. So now we have all the information for preparing the fund flow statement. Let's go ahead and prepare the fund flow statement. The fund flow statement for the year ended 31st March 2009. The first item should be source of fund, and we'll get started with funds from operation, which we have just worked out, which is 7,49,000. Then we have to think and recollect all these sources of funds in that issue of 9% preference shares, where we have worked in working note 5, which is 5 lakh. Then there was a sale of plant and machinery, of course, that was sold at loss. 40,000 worth machinery was sold for 32,000. So 32,000. Then there was a refund of income tax to the extent of 4,000 because 80,000 paid, 76,000 was the tax assessed. So there is a refund. So all this makes total sources. Then on the users, we have to think and recollect all the users. Number one, there was a purchase of land and building, which was 1,50,000. Then there was also purchase of plant and machinery, working note 1, which is 3,60,000. Then there was a redemption of debentures at premium, and it is 2,06,000. There was a redemption of preference shares, 3,15,000. Then payment of tax, we have it in working note 3, which is 1,05,000. Payment of interim dividend 50,000, and payment of final dividend, which is pertaining to the year 2007-8, it is 1,50,000. So this gives total uses. So sources minus users should give surplus or deficit, and that should match with your statement of changes in working capital movement. So here there is a net decrease in working capital because the sources is only 12,85,000, whereas users is 30,36,000. So there is a shortage, and that shortage is funded by net decrease in working capital, which is 51,000, and this will match with our statement of working capital changes as well. Thank you.